Welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, the founder and editor of the Daily Gold. Jordan and I actually got to spend some time at the recent Beaver Creek conference, chat about the markets and also about a couple companies. And maybe, Jordan, just a quick little takeaway from you. I know that I left that conference feeling fairly encouraged that there are a number of solid companies out there with good management that have money and have what I think could be pretty successful plans and goals for their company. What was your general takeaway from that conference?
Hi, Corey. My general takeaway was I think there was a good amount of optimism in the sector, and we are starting to see companies rewarded for making new discoveries or having really spectacular drill results. And now some people would say, well, that's only limited to a couple companies, but I looking at the companies I follow, I mean, I'm seeing companies that are doing good work and adding value to their projects. They're getting rewarded, even though the gold price hasn't broken above its high in 2016. I mean, now it's been over a year where it has not broken above that level. But despite that, as I said, companies that are adding value to their projects, companies that are producing really great drill results, they are being rewarded by the market. So I think that's going to continue. That's more likely than not to continue. So that's kind of my takeaway from the conference. And I mean, I know we'll get into discussing the precious metal sector, but I mean, it looks like we kind of have a failed breakout, and we're back. Well, I mean, we never really broke out of this bottoming pattern that began in the middle of 2013. So that's kind of, I guess, where we're at. We're still kind of waiting for this major breakout move, but at the same time, the cycle clearly turned 18 months ago or so, and so companies, juniors are being rewarded for new discoveries and good drill results. So, I mean, I guess that's my long takeaway on everything right now.
All right, Jordan, let's look at the actual gold price and also the U.S. dollar, because you and I have been talking a lot about the U.S. dollar, expecting some sort of bounce, and it's admittedly taken longer than I think both you and I thought it would. But the dollar is in a bit of a recovery right now, back above 93 on the dollar index. Again, a lot of this is due to weakness in the euro that has crept into the markets. But one thing you brought to me off mic was that even though we had the U.S. dollar reach a new low and break below its trading range when it dropped into about 91 on the dollar index, we didn't see gold make a corresponding new high from, well, its high back in 2016. What does this divergence tell you?
Well, in short, it tells us that gold is not going to break out probably anytime soon. I mean, I hate to be the bearer of bad news, but I mean, we were talking about this several months ago when I was bearish, before switching to bullish in August, but gold was just not really doing much and the dollar was going down so much. I mean, in the world of precious metals, that's never really a good thing for precious metals. I mean, we always like to see gold performing really well in real terms. In other words, gold's performing well against foreign currencies and stocks, and it's not just gold's going down or gold's going up because the dollar's going down. So I mean that's a concern. Gold got up to I think 1361, 1362, and I think the high last year was 1375. And I mean the dollar clearly made a new low. It surpassed its low from 2016. There's no question there. So the negative divergence just tells us that gold is not going to break out of this multi-year range anytime soon. And I mean, you don't need me to tell you that. Just looking at the action of the last couple weeks, gold and gold stocks were unable to hold or consolidate around recent highs. I mean, they've sold off quickly. They're down again today. So I think that just tells us that, look, we're back into this multi-year bottoming pattern. And I do think it will break to the upside at some point, but I don't, what that would tell me is I don't think that would tell me a breakout is not imminent, that we're not going to see gold rally back and then make this major breakout in the next 3 or 4 months. It tells me that it's going to take more time. And another point that I'll make is if you look at the monthly charts, the monthly charts are showing a key top this month in September. I mean, if you look at the gold chart, it's putting in a nasty bearish candlestick where it started the month around 1327, then rallied all the way up to 1362, which was great. But now look where it is. It's at 1288. So you're talking about a bearish monthly reversal. And we talked about, I want to say 3 or 4 weeks ago, and I was talking about, and this was at the beginning of the month, and I was talking about the key levels of 1357 for gold and 1330 on both the monthly and the quarterly chart. And so at the beginning of the month, we were well above 1330, but now we've completely lost it. And we're even below 1300. So that bearish reversal on the monthly chart, I mean, that just tells me, I mean, the odds of seeing a breakout in the next couple months are pretty low.
Hey, one other thing to note on that monthly chart for gold is that the move up early part in this month did touch that upper Bollinger Band, but as you mentioned, Jordan, we've seen quite the reversal, and we've seen a reversal down back below that $1,300 level, which really only came into play over more or less this year, as 1,300 was a very tough point for the precious metals, gold, to get through. Any significance of almost how easily gold has given up that 1,300 back on this way down?
Yeah, I mean, for one, if gold was really in breakout mode, we would have seen gold come back and retest 1,300 and have a big bounce. And so we kind of have a failed breakout in that regard. If you actually look at silver, you can draw a trend line. I was pointing out 3 weeks ago or so, it had a trend line breakout, and then it came back down and reversed, excuse me, and reversed that breakout. And so gold has done the same thing with respect to 1,300. And I don't want to say it's significant in terms of being bearish, because I mean, look, gold's already come down from 1362 now down to 1287. So it's already come down about $75 or so. But I mean, it is, if gold was going to break out in the very short term, it would have bounced right back up after testing 1,300. So it did not do that. So it's just in the very big picture, it's back into this big bottoming pattern that began 4+ years ago. And for me, the key levels are, which I've been talking about to my subscribers in the last couple of weeks, are 1280 and 1260. And obviously 1200 is very strong support. So we will just have to see what happens in the weeks ahead, if gold and gold stocks can find strong support at these levels and then produce a good bounce. But I mean, with the way things are set up right now, I still think the trend is probably going to be sideways to lower.
Okay, but that just is more to the end of the year, is it not? Now with rate hike expectations up above around 70%, I think it sounds like you're thinking that the metals will be under a little bit of pressure, albeit maybe in trading in a slightly higher range than we were at the beginning of this year through the last couple months. Is that correct?
Yeah, I mean, that's a great point. You talk about the Fed, and that's something I was informing my subscribers about in the last several weeks, where you look and I think as of yesterday, the chances of a December rate hike were 70% as far as the Fed funds futures. I mean, the Fed funds futures about 3 to 4 weeks ago were only 20%, and then they jumped to 50% literally in a week. So what I told my subscribers several weeks ago is, if we see this, if we see the Fed funds futures get up to 90%, near 100%, obviously that would produce a little bit more of a sell-off from where we are now. But I mean, Corey, you have to be a contrarian. If you look at the best times to buy gold over the last 18 months, I mean, it's basically right after rate hikes. So the market is already doing a good job of pricing in this December hike. So it's possible that just like the end of 2015 and the end of last year, maybe the end of this year is going to produce the next low in the sector, and that would be the next buying opportunity. I mean, people just I know that people, it's difficult because sometimes people, they always want to be buying, but they're not patient enough. I mean, this is something you learn after many years of investing and trading, and especially following this sector. I mean, Rick Rule says use the volatility to your advantage. Wait for the market to fully price in this rate hike. Wait for the metals and the miners to trade lower. They're probably going to trade lower, but that will be the setup for the next rally or the next big move higher. And I think that next low could probably come around the end of the year, like we saw in each of the last 2 years.
Okay, well, hey, some interesting comments there, Jordan, and something that I think we can follow along with. I'll also post a link to a recent article that you wrote where you're comparing gold with foreign currencies, gold with stocks, as well as taking a look at GDX and GDXJ, giving some lower support zones that sounds like you would like to see these charts bounce off of. So, always good to get a bit of a visual on that sense. Jordan, thanks for your time today, and hey, it was great chatting with you and hanging out with you in Beaver Creek.
Thanks so much, Corey.